Hey everyone, welcome back to Corporate Decoder. Today we're diving into the world of pipelines and energy deals, and believe me, there's more excitement here than you might think, especially when billions of dollars start changing hands. You might even call it a pipeline of profits. In this video, we're breaking down a recent report from Plains All American Pipeline, or PAY, a big player in the oil and gas industry. They're making a huge move, selling off a big chunk of their Canadian business. We'll unpack why they're doing this, what it means for the company, and where all that money is going. It's a big deal with impacts across the energy sector, so stick around. Before we get started, if you like getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below, so come chat sometime. Plains All American Pipeline Ellsgrove. First up, let's establish who we're talking about. This filing comes from Plains All American Pipeline, a master limited partnership. Basically, that means they operate a lot of the pipelines and storage facilities that move oil and natural gas around. This document is what's called an 8K, current report, and it's triggered by a significant event for the company. The date to keep in mind is June 17, 2025, which is when this event was reported. Okay, so what's the big news? It's all about a major sale. The company's selling its natural gas liquids business in Canada to Keyera Corp. It's a sale, so a subsidiary of PAA, the seller is contracting with Keyera, and PAA guarantees obligations. The legal document outlining this is called a share purchase agreement, or SPA for short. Think of it as the contract that makes the deal official. Keyera, it's worth knowing, is also a big name in the Canadian energy world. Now, the juicy part, right? How much is all this worth? The sale will bring in around 515 billion Canadian dollars in cash for Plains All American before any adjustments. Scroll will retain substantially all NGL kit assets located in the United States. It's important to note that Plains isn't leaving the NGL business entirely. They're keeping their assets in the United States and all their crude oil assets in Canada. This sale is very particular. When can we expect this deal to actually go through? The target is the first quarter of 2026, but that depends on getting all the necessary approvals from regulators and other standard procedures. Of course, being a legal document, the SPA includes guarantees, promises, and agreements, because it's a binding contract the company makes promises to each other. Think of it as everyone making their word official, with legal consequences if they break it. If you're really itching to read the whole thing, Plains plans to file the full share purchase agreement with their next quarterly report. It will be available soon. Next, let's talk about why they're telling us all this now. There's a rule called Regulation Fair Disclosure, or Reg FD. It basically says that if a company tells something important to one person, like an investor, they have to tell everyone. So this section is just saying that this information isn't necessarily subject to some legal liabilities, and it's not automatically included in other filings. Alongside this filing, Plains and Plains GP Holdings put out a press release about the sale announcing the share purchase agreement we talked about. They're also updating their investor presentation on their website with details about the transaction. However, it's also important to note that anything on the investor website is not part of this form. Finally, the document is signed off by Richard McGee, who is the Executive Vice President, General Counsel, and Secretary at Plains All American Inc. Now, stepping back and looking at the bigger picture, there are a few things to consider. What are PA's motivations here? Why sell off a significant portion of their business? It likely comes down to a few factors. One, they might be looking to simplify their operations and focus on their core strengths, which seem to be in the US and crude oil. Two, that $515 billion in cash can be used to pay down debt, invest in other parts of their business, or even return capital to shareholders. What are the risks? Anytime you sell a business, there's a risk that you're selling it too cheap, or that the deal falls through. Also, there are always integration risks for the buyer, Keyera, as they take over the new assets. Despite selling part of their business, this move could strengthen PAA in the long run. It allows them to streamline focus on their key assets and improve their financial flexibility. The market's reaction will be something to watch. Alright, that's our breakdown of Plains All American's major asset sale. What do you think about this strategic move, and what does it signal for the future of the company? Let me know in the comments. If you found this analysis valuable, hit that like button and subscribe for more deep dives into the world of corporate filings. Don't forget to check out our Discord server in the description below. Thanks for watching, and I'll see you in the next video.